Hey everyone, welcome back to the channel. Today we're going to talk about a specific type of trading, in fact a concept, which is known as price action. Of course, price action has a lot of meanings and price action trading has a lot of methods, but I'm going to show you how I trade it and how you can trade it, and no matter what the asset. It can be stocks, crypto, forex, and even binary options, okay? So let's get into it. So let's begin by defining what price action trading is. Okay, so a lot of people use indicators. A lot of them use newer methods like smart money concepts, ICT trading concepts, or even Wyckoffs and other stuff like harmonics and Fibonacci. But price action is really focused on the price action. And what do I mean by this is that you will witness how the price behaves, and there are certain patterns that really repeats themselves throughout the time, okay? And as price action traders, we should exploit these patterns and find good trading setups, okay? So we don't use lagging indicators, volume, none of this stuff, okay? But we use trend lines, support and resistance levels, and also candlestick formations and some chart patterns, which one of them I'm going to specifically focus on today, which is the flag pattern. But let's begin by seeing how we can analyze price action. Imagine that we have an uptrend like this. First, how do we define uptrend in classical price action? We define it when the price is making higher highs and higher lows consistently, okay? So as you can see, the price is making a higher high, a higher low compared to the low before, and another higher high compared to the high before, okay? So this is a classical bullish trend, and here we have a bearish one, okay? This is a bearish price action that we're making lower lows and lower highs consistently, all right? So when does a trend shift? It shifts when we have something like this. At this point, we have a lower low, or maybe this point. Let's imagine it looks like this. We have a lower low compared to this one, and a lower high compared to this one. So there is a shift in market structure, trend, or price action, and we go from bullish to bearish, okay? So why do people trade price action? Of course, there are a lot of reasons. First of all, when it comes to indicators, I mean, 99% of indicators are lagging. So they focus on historical price action, all right? So how the price has been behaving, for example, on the period you set, for example, the last 5, the last 10 candles, or even the last 2 days, the last 5 days, no matter what. But these indicators produce and calculate numbers that we use and produce graphs that we use that are based on previous price action, okay? But in classical price action trading, we also use historical patterns that tend to play out a certain way, that we can capture profits from them, but we won't use lagging indicators, all right? Because indicators sometimes produce a lot of false signals, so they might not be the optimal way to trade. At least you should pair them with your price action knowledge, or newer concepts like ICT trading, or even pair two indicators together to create a good trading strategy, okay? But with price action, we just look at the chart naked, okay? No indicators. And this makes it easy and simple, but only after a while that you get an expert in reading price action. So you should go into a lot of backtesting and tape reading to get to that point that when you witness a chart, you know which phase it is in. Is it in the consolidation, correction, or is it trending? And when you should be in the market and when you should sit out. So now we're going to talk about a certain chart pattern, which is the flag pattern, okay? So imagine we have a bearish trend like this. The price is making higher highs and lows and reaches a certain point when it is consolidating or even pulling back a little, and then it continues lower again, okay? This right here is a flag pattern. Now, what is a flag pattern? It really looks like a flag with a pole. This looks like an upside down flag, of course. This is a pole and this is a flag, all right? So we use these trend lines as boundaries for our flag pattern. And if the price breaks either of them to either side, we are likely to witness a continuation in that direction. But there is a point to consider, and that is our overall trend is bearish here. So if we focus on getting the shorts, it will add to our probability of winning, all right? So never trade price action patterns. For example, the flag pattern, which is a continuation pattern for reversals, okay? We have other reversal patterns in price action, which I will briefly discuss later. But for now, the flag pattern consists of some highs and lows that are trapped inside two almost parallel trend lines. There are some points of entries that we can use to capture, the flag pattern setups. There are two specific points of entries that I'm really interested in. The first one is the third touch of the flag, okay? So the flags almost always, when of course they're valid, they almost always have a three touch on the higher trend line. And this is for the bearish flags. For the bullish flags, it's vice versa. And they have a third touch on the bottom. So one of our points of interest will be right here at the third touch. And after the rejection, we can get into a short. Another one will be at the breakout. And in fact, there's also another entry that we can use, which almost always, or rather often, occurs. And it's a pullback to the broken boundary or broken trend line of the pattern, which makes it the third entry, all right? So these are three possible entries that we can exploit when trading the flag pattern. And this is for the bearish flag. For bullish flag, and remember guys, when I say bearish and bullish, I don't talk about the direction of the flag, I talk about where it's gonna lead to, okay? This is a bearish flag because it's gonna lead the price action lower. And this will be a bullish flag, all right? Because mostly the price is likely to bounce inside it and continue higher, okay? So this is a bullish flag and this is a bearish flag. So let's get to the charts and see how it works. All right, I'm on the 1 minute time frame of the euro dollar pair. And as you can see, the trend has been bearish. And right here, we're experiencing a pullback or a correction. And the price is creating a bearish flag right here. Some people also call this a wedge pattern, which of course you can call it a wedge pattern if you want to, but I don't like to overcomplicate things. This is also a rising wedge pattern, but I call them all flags, okay? So yeah, these lines are not parallel, but they work the same, all right? And also, we initially had a three touch, but then the price has broken it to the upside. And you could have anticipated this because the price is almost always looking for liquidity, okay? This is something that I borrowed from ICT methods. But right here, we have a resistance level that we break above and capture all the liquidity. But then again, we create two almost equal highs. And then we also break through them, capture all the buy side liquidity here. And let me find my flag. Okay. And right here, this is our actually fourth touch, and it's not even a touch, it's a false breakout, okay? These breakouts, these false ones, give one of the best probabilities for trading flags, all right? So now you can enter when the price comes back into the flag, okay, and closes inside it, which will be this candle right here. Our stop loss can be above the recent high, or it can be above the flag. I prefer the recent high because I like to give some breathing room to my trades. And your take profits are actually three. You can take some profits here at 1-to-1. You can take another profit at the other touch, or you can go all the way for the first touch of the pattern, okay? Let's see if this one works. All right, guys, this is a beautiful trade using a flag, or you can call it a wedge pattern, either a bearish flag or a rising wedge pattern, okay? So as you can see, the price has created a false breakout right here, hunting all the liquidity residing above these levels. Then it dropped right back into the pattern, okay? So this was our point of entry just when the price has closed inside the pattern, okay? So the second point of entry could be when the price breaks below the pattern. So this will be it. And again, here's the stop loss and here's the take profit at the recent lows right here. And this will, have some drawdown, almost 50% drawdown before going into actual profits and hitting the TP. And another one can be the pullback right here, because the price has pulled back to the lower boundary. Then it has been rejected slightly. You could have entered right here, putting your stop loss again above the high, and you witness that the price action goes bullish for a while and climbs back inside the flag before crashing down. All right, so these are our three entries on a bearish flag or a rising wedge pattern, which again, I have to state that I treat them the same because they actually behave the same. Okay, so now imagine you're a binary options trader. Okay, so the strategy I've just explained works for forex, crypto, CFDs actually, and other types of trading. But for binary options, things can get a little bit tricky because in binary options, we don't have stop losses and take profits. We have expiration times. So we should optimize our strategy for binary options now. So let's see how things will be for our binary options trade. When we're trading binary options, I don't like to enter here on the false breakout or even here at the breakout, because as you see right here, if you, for example, execute a 5 minute when you're on the 1 minute time frame, the 5 minute binary option is likely, yeah, I think it closes right here. Okay, so that's not optimal. What I like is when these actually pullbacks are ending, I will enter the trade. Okay, so how do I identify when the pullback is over? Well, I want a really large reaction in our initial trend, in the direction of our initial trend actually. Okay, so this is not a large reaction, but this one is. All right, so this shows the bearish momentum and that the price is bound to drop lower, at least probably. So let's, for example, imagine that we enter here. We are trading binary options, so the risk reward tool is irrelevant, but I want you to see how actually and where we are in profit and where we are in a loss. Okay, so we execute a lower binary option or a put right here, right at the end of this candle. And remember guys, don't enter candles when they're still forming. Okay, enter the closes and the opens, only trade them. All right, because it's a lot easier to forecast price action this way. After this candle closes, we execute our put, and I usually recommend everyone who's trading binary options to analyze on the 1 minute time frame, but execute their binary options trades for between 5 to 10 minutes expirations. So this second rule depends on the strategy you're using, and for the flag pattern and for price action strategies, I suggest using 10 minutes or at least 5 minutes. Okay, you can't really go lower than 5 minutes. I don't recommend it if you have a strategy that works in like 60-second binary options, or even shorter, for example 30 seconds. Of course, if the platform allows it, or even 2 or 3 minutes, you can go ahead, but I don't trade this way. Okay, I like to let the price shape and the price action form the way I want it to. And if after 5 to 10 minutes that I set an expiry, it doesn't and I lose the trade, so be it. Okay, but my edge lies in these two rules for almost any strategy. Okay, so for example, when I'm going to trade flag patterns and price action, I prefer 10-minute expiration, so a 10-minute binary option. But here you can see that both 5-minute executions and 10-minute ones work, because right here, if we enter, there are 1, 2, 3, 4, 5 candles. Our 5-minute binary option will expire here, and the 10-minute will expire somewhere down here, also in profit. And you should know that binary options does not reward you on how much the price moves in your favor, but it's actually binary. If it's lower and you execute a put when the binary option expires, and when the price is lower, then you will get a profit, and if not, you will lose the trade. So thank you guys for watching this video, and this was a really quick, brief, but also detailed analysis of how price action trading and specifically the wedges and flag patterns work, and how you can apply them to both CFDs, forex, crypto, and binary options trading. If you're going to try out trading binary options on a demo account, you can use the free demo account of Pocket Option. You should just register, and I'll put a link below so you can use it. And if you've liked this video, make sure to hit the like button and also subscribe to our channel. We have a really busy month ahead of us, and we're going to talk about a lot of trading strategies for both binary options and other instruments. Okay, so that's it, and see you soon.